What's up, everyone? It's Caddy with Money Vesting. So where do we even start with today's market live stream here? There's just so much fear. There's just so much selling pressure across the board for so many names. And of course, the NASDAQ ETF is down close to 3%. We've got the SPY down over 2.3%, and we've got the Dow Jones dropping 2% with the yields pushing higher. They're up over 3.4%, so they're up to 3.26%. And then we've also got the volatility. So VIX is up almost 18% on the day today. So yeah, there's a lot of pain here in the markets. There's just been a lot of selling across the board. We're just seeing that continuation from the Friday's hot CPI numbers, and this week is a big test for the NASDAQ ETF, for the SPY ETF, for just the markets in general, given their long-term trend of validating certain moving averages. So it is a really important week. We've got the Fed on deck here on Wednesday. We've got PPI numbers tomorrow. We've got retail sales later this week as well. And we've got quadruple witching Friday. So it's time to basically brace ourselves because there is a lot of volatility and a lot of price movements as well in the markets overall. I don't think we need to do the poll today. I think so vote please. I think the voting is pretty clear. I think the markets are expected to remain down, and we're expected to pretty much stay red. So I don't expect anybody to be bullish today, but we can still do the poll just for fun, just to see how many people are going to be expecting the markets to be red today. So make sure that you do vote and let me know green or red for the markets today. So super red, Timothy says. Yeah, we can also do how much the markets might drop. I think that's also another really interesting poll that we can do. Once this one ends, then we'll do the next one. Okay, so global markets are tanking ahead of huge week for central banks. So we've also had shares in Asia companies, Asia Pacific. So Timothy, I'll roll out the green mic soon. Don't worry. I'll bring it out, once the dust settles, according to sort of my expectations. But right now we're going to have to do with the green mic and this, the red mic, in fact. And this has obviously been a big curse for the markets overall, right? So they've just been selling off. We're getting hotter than expected inflation reports. The Fed is super aggressive, or they will be on Wednesday. So in due time, it will be out, don't you worry. But Asian markets were also selling off pretty aggressively. So Hong Kong's Hang Seng Index was also down. Don't time the market and mic timing, sir. Yes. So Japan's Nikkei was also down, and South Korea's Kospi also falling. All of them more than 3% down on the day. And Aaron, welcome on board. Thank you so much for joining. So yeah, make sure that you guys drop a like. I really appreciate that very much. So punch in the gut. Obviously, central bank to adverse market reaction on Friday's CPI reading is the fear that inflation expectations have broadened and become entrenched beyond the well-documented ephemeral drivers such as supply chain bottlenecks and energy shocks. I do think that the probability of falling into a bear market and indeed a recession has undeniably increased as a result of Friday's punch in the gut in the way. So Fahad Kamal, Chief Investment Officer at Hambros. But reading further, European stocks slide 2%, bond yields spike as traders fret over a possible recession here. So 2 years once again jumping well above the 10-year. And if you take a look at the spreads, this right here is a number. They're not quite negative, but they are down close to 24%, right? So they have definitely been selling off aggressively. So they're down to 7 basis points right now. So let's see here. Are you still on the green mic? All right. So, but anyway, they haven't turned negative yet, but they're still trading as low as 7 basis points right now. They're down close to 24%. The 30 and the 5 is negative, so there it's down to 9 basis points, and then we got the 10 and the 5 down about 12 basis points in the negative, down about 23% as well. So global food prices are soaring as well. We've got commodity prices going higher, obviously. So rice could be next in line. The United Nations Food and Agriculture Organization Food Price Index already showing international rice prices creeping up for the 5th straight month to reach a 12-month high. And of course, Bitcoin dropping pretty significantly, cryptos in general, and Bitcoin falling 14% below 24,000. And of course, Ethereum was also down pretty substantially, coming down to 1,200, 1,300 levels, and wiping out $200 billion off of crypto over the weekend as well. And yeah, so pretty brutal sell-off here for cryptos overall. We talked about the earnings per share, which is going to be very, very important for the markets overall for the S&P 500. And I've actually got a spreadsheet to show you guys over here, which we can go over in a lot more detail. Because, again, we have to at least have some estimates as to where the price earnings multiple could be based on the earnings per share. Because if we don't, then we have no idea where this potential market could be headed down to, right? We've got to have some levels in mind that we're watching, both from a technical standpoint and from a fundamental standpoint, from earnings per share standpoint, so that we have a good idea on, okay, how much potential downside can we expect more or prepare for in this market environment, which is obviously going to be very much related to the earnings per share. That's the corporate earnings for stocks in general. So Barclays reiterates Apple as equal weight. We got RBC upgrading Tesla to outperform from sector perform. Morgan Stanley reiterates Coca-Cola as overweight. We got JP Morgan reiterating Ulta as a top idea as well. Guggenheim reiterates Nike as a buy. And we got Jefferies reiterating Amazon as a buy also. And UBS reiterates Chipotle as a buy, and Wolf downgrades DocuSign to underperform from peer perform, and Jefferies reiterates Microsoft as a buy as well, and JP Morgan reiterates Apple as overweight, and the Fed, of course, is going to be on Wednesday, and we'll see how much of a Fed hike we can expect, whether it's 50 basis points, 75 basis points, so that is obviously going to be very, very important, and this is, again, soaring bond yields. So let's just take a look at the markets. Again, a lot of the stocks down here. I'm going to go over the comments. So Mohammed says, Amazon has very bad delivery and Caddy is still buying Amazon. Yes, I'm going to keep buying Amazon and I will be buying Amazon. I don't think they have bad deliveries. If anything, they are doing very, very well. Of course, they're dealing with a lot of macroeconomic challenges, pretty much all of them out there when it comes to oil prices, supply shocks, shortages, logistics networks, and of course, prices overall going higher is affecting the margins for Amazon overall. So it's a short-term catalyst for them, and long-term they still are absolutely an insane potential buying opportunity in my view. Closer to $100, and of course, below $100, if it does come down to 90, sub $90, would just be an incredible deal. All right, let's see here. So, all right, unboxing plus, Caddy, can you say one sentence what to do right now? Down 45% on Amazon, Tesla coin. Please say something that can ease the pain. So there's nothing that I can really say that's going to ease the pain here, unfortunately. That's not what I'm here for. I'm here to tell you guys objectively what I think about the markets overall. And of course, individual stocks and individual companies and how they're performing. I think that's the main idea. That's the overall goal, is to look at quality companies. And if you can find them with good, solid cash flow, revenue, earnings, balance sheets, then those are the ones that are going to be able to weather through this tough time and come out front when the economy starts to rebound. One of the things that I really wanted to go over, and this was very interesting, that I also posted in our Discord last Friday when the markets obviously were down quite a bit. So I want to just go over that here very quickly, and I'll bring it up before we go over the earnings per share stuff that I wanted to talk about. So this right here is something that we talked about. So this is from Peter Lynch, and he was, running the Magellan Fund at Fidelity. But researching fundamentals will help you keep grounded. Invest in companies after you've done the homework on the company's earnings, financial conditions, competitive position, and plans for expansion, and so forth. And stand by your stock as long as the fundamental story behind it has not changed. And this right here, the last piece, was actually very, very interesting. The year was 1982. Was a very scary period for America. Recession, inflation was at 14%. The prime rate was at 20%. I think that's the only thing that, obviously, we're not there yet. At that point, interest rates were much higher than inflation, and right now it's kind of like flipped. But the economy was apparently in a free fall. And one of Fidelity's shareholders wrote to Lynch and questioned, do you realize that over half the companies in your portfolio are losing money right now? And Lynch answered, these companies are going to do well once the economy rebounds and comes back. And we've gotten out of every other recession. I don't see why we won't come out of this one. And of course, we've seen what happened over the last several years since 1980s. The markets have done really well. So I don't really buy into this idea that obviously this is going to be a free fall and we're just going to keep going lower and lower and lower. This has definitely been a very painful time in 2022. But and I'm not saying that this is the end, right? Certainly in the short term, there's going to be a lot of potential weakness. There's a lot of catalysts, a lot of headwinds to deal with for the markets right now with interest rates, inflation, and the list goes on and on. The wall over is about as big as it can get right now. It's just really, really big. And there's always going to be something to worry about. But if you have quality companies, if you have great prices, sell puts, dollar cost average, whatever you need to do. But obviously, it's coming down to some very attractive levels, for individual companies. So I'm looking at selling cash secured puts, looking at even buying some of the names if they do come down to my fair values. And I might not make money this month or this year, but over the long term, that's the whole idea. And options wise, we're still killing it. We're still doing really well with options trading, and that's what the environment is really all about. There's a lot of volatility, and you got to be able to take advantage of that either by day trading, swing trading, or of course trading options as well. So. All right, so let's take a look at Bitcoin and Ethereum. I think that's been a lot of question here. So Binance, stopped receiving money, liquidity. So that's been another issue with Binance and some of the crypto brokers. They are, I think, holding back on some withdrawals. But let's take a look at BTC first. So 23,000, just a really, really massive red candle here, down over 11.7%. So coming down to 23,465. So just a very, very brutal sell-off here below 28,000. And the next support, unfortunately, is going to stay all the way down to 20K. So that is going to be that next support level to watch for Bitcoin right now. And of course, this is going to turn into a very strong resistance at $30,000 for Bitcoin. I call it $31,000, $32,000 right now. So that's going to be the level. And then for Ethereum, we're trading at 1,200. Once again, very, very brutal sell-off. We just absolutely crushed below our 1,286 support. And the next one to really watch is going to be around here at close to 1,000 pretty much. That's going to be the level to watch. But just an absolutely insane momentum to the downside for overall cryptos in general. So a lot of liquidation for cryptocurrencies. So, okay, I want to go over earnings per share. This is, again, very, very important. This is really what's going to be driving S&P 500 overall, because that's the earnings per share. That's the bottom line corporate earnings. So let's see here. So David Young says, unless you're planning on living off your gains right now, why is everyone freaking out? This is a huge opportunity, and I'm personally excited about the huge gains in the future. Dollar cost average and enjoy it. David, to the point, like this... Yeah, absolutely. I couldn't agree more. And I feel like there's been a lot of fear. There's been a lot of panic in the markets, right, overall. And that's, very normal to see. That's very normal to witness. I think 2018 was a very similar time when the markets were selling off pretty aggressively, and we had a bear market at that point as well. So, yeah, I couldn't agree more. But let's just talk about the earnings per share. And this year, so far, we're still expected to grow at least 9.6%. That's going to be the earnings per share of $228. So, how does PE work if it doesn't take too long to explain? Okay, so the PE ratio is simply the price over earnings, right? You can calculate that for any index. You can calculate it for any stock. You can calculate it for sectors. So what it does is that it simply takes the price of that stock or that index or that sector, whatever you're looking at. So in this case, since we're looking at the S&P 500, so the price, which is in the numerator, is 3,900. That's the price, right? That's an index level, call it. It's not really a price, but it's an index level that we're looking at for the S&P 500. And when we take a look at the earnings, which is the bottom line, that's the earnings per share, right? For all the S&P 500, in this case, we're looking at the index itself. So we're looking at all 500 companies, and we're looking at the earnings per share for those 500 companies. So when you do that price over earnings, so when you divide those numbers, you get a multiple, right? You get a PE multiple. And that valuation multiple is pretty much broadly utilized for not only valuing indices, but also valuing stocks, also valuing individual sectors. So historically, you'll notice that when we're trading at a higher PE multiple, when it's 25 or 30 or 40 or 50, then that usually suggests that the markets are overvalued or that stock is trading at a very high multiple. And on the opposite side, if it's trading at a very low multiple, like let's say 10, 12, 14, 16, then obviously it is trading at a very reasonable to low multiples. So right now what we're trying to understand is that, okay, based on the estimates, by the way, market's going to open in about 5 minutes. So we'll recircle back to this because this is really important. What this does is it helps us understand that where could the S&P 500 land given the earnings per share revisions, right? I forgot to go over this In my previous video, I completely forgot about this. This was a spreadsheet that was open, but I wasn't able to cover it because I forgot. So I'll go over the spreadsheet in this live stream. But let's see here. So 10-year is over 3.28%. Yes, the 10-year yield definitely pushing higher, 3.28%. Fed's quantitative tightening is underway. It started June 1st. I did a couple of videos on that as well. And this should not be as a surprise to anybody. This is something that we were anticipating, that the 10-year yield is going to be elevated. It's going to stay pretty elevated because of all the Fed tightening and the balance sheet roll-off that we're seeing, right? They're now starting to roll off their mortgage-backed securities and the U.S. Treasuries. So for those reasons, they're not replacing them, or in other words, they're not buying anymore. And that's putting pressure on prices. And as a result, yields are pushing higher. So that's that inverse correlation. Okay. Let's take a look at the individual names here. We'll open up some of the charts. We've got 3 minutes left for market open. And once the market's open, once we're settled in, then I'll go back over to that S&P 500 earnings per share chart, which I completely forgot to go over in my previous video. But we'll take a look at that, and that will give us some good understanding on where the S&P 500 could end up given the actual earnings per share estimates. So we got the NASDAQ here, 5-minute chart. We've got the S&P top left, 5-minute chart, and we've got the S&P the Dow Jones down here, the bottom right, 5-minute charts, and of course the yields are already at the 5-minute chart here. Okay, so 81% expecting the markets to be red and 19%. That's been kind of like the norm, right? We haven't been able to break that 81 to 82% mark on people expecting the markets to be red. Even on the most bearish days, we find at least 19 to 20% people expecting the markets to be green. So that's been kind of like the threshold. There's never been a day where 90% or 95% of people expecting the markets to be red or green, right? It hasn't been the case, even though the S&P, the NASDAQ, they're down 2 to 3%. So I'm going to end the poll 80-20. That was the result here. Make sure that you guys drop a like also. I really appreciate that. Thank you very much. And great day to drink heavily. Yeah, maybe later in the day, depending on how the markets trade. I do have some options that I do want to trade right at market open to see if there's any opportunities. I've already mentioned a couple options that I will be trading at the open for a few stocks. So shop today or tomorrow, guys. So Andrew, again, great question. Really depends on individual companies that you're looking at and the fair values that you have for those companies. For example, if you're looking at, let's say, Apple, and if you like Apple at these prices, then, it doesn't hurt to dollar cost average. But of course, my fair value sits at 115. So I'm going to wait a little bit longer for the stock price to come to us. And 115 is a level that I'm really watching for Apple. And that's going to be the level where I would be a little bit more aggressive for Apple overall. For Tesla, I nibbled in a little bit last week. As I said, in the 680s. Right now it's down a little bit, close to 4%. So if it sells off even further, looking at the next price really is going to be closer to my fair value. So my fair value sits at 475. So sub 500 is really when I'm going to be a lot more aggressive for Tesla. So nibbled in a little bit last week, but if it does sell off even further, then I'll be a lot more aggressive at those prices. So, okay, let's see here. So 5% drop in the NASDAQ. Oof, that is going to be pretty brutal. It could be one of those days where we hit circuit breakers as well, right? For the markets, and they get halted. No more trading because of the volatility. So the VIX is up. Very nice, 17%. It was up much higher, closer to 18%. It took us time, right? We were talking about these levels at closer to 25, 24. We were watching these levels very carefully, and then immediately after that, it's up 39 to 40%. All right, so off we go for the markets. NASDAQ opening down here a little bit over 3.5%. So we are at breaking down below 11,000. So where are we? There we go. There we are. Breaking below 11K, right? That is a pretty significant breakdown because remember, we're watching this level on the NASDAQ's monthly chart. So we just briefly breached this 50 EMA on the monthly chart at 11,093. So if the Nasdaq can rally about 90 points today, then sure, we might close above that 50 EMA once again, but we are starting to briefly breach that 50 EMA. This is a 14-year long chart. Kevin says, holy, I'm getting alarms going nuts. We are hearing a lot of beeps on your laptop. Yeah, so I just turned that off. Sorry about that. But yes, the Nasdaq here, we'll keep a close eye because, as pointed in my previous videos, the 50 EMA, that is very, very important for the monthly chart. And then, of course, for the weekly time frame, we're looking at the 200 SMA here on the Nasdaq, which is sitting roughly, we're like perfectly sitting above that 200 simple moving average. So, we'll see if there's any buyers that do step in, but we just made a new 52-week low. A new 52-week low for the Nasdaq, just under 11,000. So there we go. Nasdaq here, S&P 500 over here, and we've got the Dow Jones all down close to 2 to 3%, and we've got the yields pushing up 4%, almost at 3.3%. And looking at individual names, Nvidia here down almost 5%, down to 160s. AMD down to $91. PayPal is down 2%. Google is down over 2.7. Apple is down 2.6. Meta Platforms down 2.4. Amazon's down 4.5. And we got Tesla down close to 3%. So yeah, that is the situation right now. Some buyers stepping in at the open, but we'll see how we close. That is really important. It doesn't really matter how we trade intraday, but all that matters is how we close on the day, and of course on the month and on the week as well. So keep a close eye on that 50 EMA, 11,000. Last time we were here, we got bought up, so. All right, so we'll take a look at the Dow 30 names. We'll circle through some individual watch list here. So Dow 30, almost all of them are down. So no doubt, 3M barely flat, but Boeing, Salesforce, Visa, Nike, Exxon, they're all selling off. Microsoft, Apple, Chevron, pretty much the entire watch list is red. Take a look at the main watch list here. Oof, there's about to be some real brutal sell-off for a lot of companies. So yep, so Coinbase with Bitcoin down 16%. Absolutely crazy. We got Robinhood down another 8%. Astra is down 24% right now. Square is down 5%. Alibaba is down 5.6%. CrowdStrike, we got SoFi, we got Upstart. By the way, that reminds me, I do have to, let's see here. Just give me 1 minute. Because I was going to say that I got to send out some alerts and see if I can put in some option trade alerts here. So Adobe, Kang, I'm gonna actually do a video on Adobe very soon. So we'll take a look at Adobe before the earnings come out. So don't worry, I'll definitely be doing an update for Adobe. Just hold on. I just gotta trade a few options here. We'll keep it on individual names, individual stocks. PayPal definitely getting some buyers to step in, and so is AMD and Meta as well. But we've seen this play out time and time again. They do push higher, but then they get sold off right back down. Okay. All right, so 1 second here. I'm just gonna bring it over here. Okay. All right, so let's take a look at the markets overall, then we'll go over and switch over between different sectors as well. Margin call alerts? No, I don't trade margin. So let's see, 475. Okay. All right, so NASDAQ here trying to make a little bit of recovery. So right now, still down 2.7%, but back over 11,000. 11,090 is where we are on the monthly chart. That's the 50 EMA, and then of course the S&P is getting bought up at 3,800. I mean, take a look at the low. The low for the day on the S&P 500 at 3,800 once again. So if you come over to S&P here and you take a look at the fib level, let's go over the weekly chart here. We exactly validated 3,800 on the week of May 16th. We came down to 3,810, and today's low was 3,800, 3,801, right? So we're once again 3,800. That's a level to really be watching for now. So we'll see if we do find any buyers to push back higher. And the Dow Jones also still down 1.7%, but just over 30,000, a little bit under 31,000 right now. So that's where we are. And then we also have some individual stocks starting to push up. So Nvidia back over 160s. We got Meta, back over 170s. Amazon's back over 106, still down 3%. Pretty much all stocks are down. But at least they're getting a little bit of bids here during the day. But that, doesn't even come close to how much work that the markets need to do in order to go back higher to all-time highs here. Okay, so let's see here. So, okay, let's just go back over to this chart, right? This Excel spreadsheet, which I think is more important for us to pay attention to. And you'll notice that right now, the earnings per share estimates are at $220. Okay, so that's the EPS estimate for 2022. That's going to be about a 9.6% growth from last year, from 2021 numbers. So 2020, of course, we saw a big contraction, 22% contraction. Then 2021, we saw just an insane growth for earnings, 70% because of all the quantitative easing and money printing. And 2022, we're expected to grow by 9% for the earnings per share. Now, if you come over to this chart, this is more like a sensitivity analysis, and what this shows you is how the PE multiples, or how the S&P 500 value is going to change based on different EPS and different PE multiples. So what I have here is that I've got on top different earnings per share. So I've got 225, 230, 235, 240, 220, and 215. And then I've got different S&P 500 values over here. And based on that, we're getting different PE multiples. So what that shows is that, okay, for example, in the next quarter, earnings per share get revised down. All the analysts have a negative revision. You know what? Recession's coming on board. Interest rates are going higher. Earnings are not going to grow as fast as what we thought they were. They're going to cut their estimates down to 220. So 220, and now we got to figure out what's an appropriate multiple for the S&P 500. Is it 18? Is it 17? Is it 19? Is it 20? Is it 15? In my view, I think it's appropriate for us to be trading at around 16 to 18 times earnings, around those levels. So if you take this three numbers here, 16, 17, 18, this is where the price ends up being, somewhere between 36.75 to 39.75 for the S&P 500. That's after an earnings per share cut from 220 down to 220. If you go to 220, we're still growing by 5.7%. If you go down to, let's say, 215, we're going by 3.37%, and that is going to bring our estimates down a little bit further, maybe to 35.50 and 36.75, right? And this is where S&P 500 is right now, 3,900, actually 3,800 after today's drop. So this is where it would need to either go up or higher based on these levels. So for 44.75, you would need to rally another 17%. For 4,100, you would need to go up 7.8%. For it to come down to 35.50, it would need to drop by 6.5%, so on and so forth. So this spreadsheet I will share with everybody, all the members, and then you can take a look at different earnings per share, different S&P 500 values, and different multiples, and how much it needs to potentially go up or down for it to make sense. But here we go. We're starting to fall right back down, and we've got the Nasdaq back under 11,000. S&P is now under 3,800, and of course the Dow Jones here is also down close to 2%. Selling further below some of those key levels. So we're now starting to break down that fib level of 0.382, and of course we're down over 20%. So this is now once again officially a bear market for the S&P 500. We were in a bear market just a few weeks ago, and then the markets got bought up a little bit. S&P obviously rallied over 9%, and a couple of weeks later, after the inflation numbers on last Friday, we're right back down over 21% from all-time highs. So the next support really is going to be that 35.25. So this is going to be that next support here, next fib level pretty much at 35.20, 35.25, around those levels for the S&P 500. That's going to put us down, I think, close to 30% from the all-time highs, 27 to 28%. And looking at historical bear markets, so Jolly says time to go straight to zero. Looking at historical bear markets, going back as far as like the 1900s, like 150 years, we also learned that an average bear market obviously takes about 12 months to settle all the dust, and at the same time it drops somewhere between 35 to 37%. So based on that 35 to 37%, we're looking at even lower levels, closer to 3,200. So that's going to be that pre-pandemic price, which would obviously be very catastrophic for a lot of individual companies as well. I want to take a look at Upstart also. So now down close to 7% on the day, trading as low as 34.60s. So no stock is obviously higher today, none of them. UVXY, that's an inverse volatility ETN, so it's pushing higher obviously, but everything else is straight up down. All right, so does anybody know what Buffett is buying? He's been buying oil companies, so he's been buying Occidental. So OXY has been one of the stocks that he's been picking. I've honestly been contemplating buying a put on ExxonMobil, and the reason is because you take a look at this monthly candle. That's such an inverted hammer candle, and even over the last week, it formed the perfect inverted hammer candle, right? This was last week. We got up to 105, and then just immediately after that, we started to sell right back down, and this is also resistance coming in from 2014. So I'm just like really tempted to short XOM here, and given how overbought the RSI and MACD is at these levels, like it's just on a monthly candle, it's just really overbought. I'm really looking at different plays to take advantage of this potentially if it starts to pull right back down. So G, what platform do you purchase stocks on? So I use a couple different brokers, TD Ameritrade, Fidelity, Webull. Those are some of the ones that I use. Man, look at how much volatility we're going through. Like the markets are really reluctant for the S&P to stay below 3,800 and the Nasdaq to stay below 11,000. It's just, that was the whole point, right? The big battle between the Bulls and the Bears. I mean, this was it. This is live action. This is better than UFC. You're seeing it live right now. I mean, just the sheer competition between the Bulls trying to stay above certain levels and the Bears trying to push it down. And you're watching it for free, right? You're not paying crazy money like UFC fights. So we'll see. I mean, if the Nasdaq closes below 11K, I think that would definitely mean more downside. Julie says, bring out the green mic for the TKO. Snapchat's at $12. Wow. No way. Let's take a look. Wow, $12. That is just insane. I mean, you're seeing some insane prices for the markets. All right, I want to take a look at some of the options here. Don't look at Bitcoin. Why is it falling even more? Down 10.7%. So yeah, I mean, it's still down, obviously, but it was much worse, right? Low 23,000s. Coinbase at $39. Let's take a look. Getting bought up though. I mean, it was trading as low as 46, but a very strong green candle. So intraday is just getting bought up very, very aggressively. I mean, the earnings, I'll admit, when they reported earnings, they weren't great. They were actually really disappointing with the declines year over year. Broke down the entire earnings on the channel, but you've got Chinese stocks selling off. So, you know, all Chinese stocks, Alibaba, NIO, JD.com, Baidu, XPeng, they're all down 7-8%. Let's take a look at this heat map here. Let's see what we got. Ooh, this looks spicy. This looks real spicy here on the day. Look at that. Every single sector is in the red. Every single stock's in the red. Wow. Just wow. I mean, you've got maybe one stock, Imperial Oil Limited, that somehow is up 2%. We've got PetroChina, that's up 35 basis points. One small little green box. Well, there's another one in basic materials, specialty here. What is it? Senes Tech, SNES at 53 cents. You're up close to 4%. Congratulations to that one person in the live chat that might be invested in this company. This one actually, interestingly enough, somebody mentioned this to me earlier, up 1% in the financials and banking sector. Let's see. We've got EMN, Eastman Chemical Company, slightly higher. All right, so 3M, let's take a look. Is it really up? Or is it? It's mostly flat. Okay, so it's slightly up 18 basis points. Definitely getting bought up here on the day, so that's good. But man, this is brutal. Look at that. 1 day performance. All sectors down over the last 1 week. All 11 sectors down. Incredible. Not only the sectors, I showed you guys the industries as well, right? In our previous video, I talked about the industries. This is individual industries within sectors. And just the amount of sheer red over the last 1 day, and I'll go over the weekly as well. Shell companies, flat. But everything else, you go down the list, all red. This is the last 1 week. Everything red. Down, down, down. Incredible. So Ern says waiting for Bitcoin to test 18,100. So yeah, 20,000 is going to be that next sort of support that I have for Bitcoin. But yeah, I mean, given so much potential downside, given the selling pressure, just so much momentum on the downside, unfortunately, there's no fundamental sort of metrics for us to look at. There's only technicals really to look at for Bitcoin and for Ethereum for any type of analysis, right? So Bitcoin, as I've mentioned before, it doesn't have any cash flows or anything. So we can't really look at it from a fundamental perspective. But from a technical standpoint, I think 20,000 is going to be that next level to really be watching. So, okay, we're back under 11,000 here on the NASDAQ. We'll see if this level continues to hold intraday. S&P 500 literally at 3,800. We're just hovering at around 3,800 right now. All right, let's take a look at Palantir. Let's see how Palantir is doing. I'll just include Palantir in one of the names here. Tesla's down over 5% now, 661. Google doing a little bit better than some of the other names here. So Palantir down 6.6%, so $7.72. I mean, chances are, whatever you look at today, chances are it is going to be down. It is going to be red. right? I mean, you've got cybersecurity watch list here, all red. You've got, so everything, I mean, CrowdStrike's down 10%. Ping, Palo Alto Networks, Zscaler, Fortinet, Okta. You've got energy names, everything down. Everything is red. Devon, BP, Shell, Occidental, XLE. You've got banking sector. All banks down. Retailers, maybe that's where defensive sectors are. Let's take a look. So retailers here, again, all of them are down. Macy's down 5.6, Amazon's down close to 4, Best Buy, Target, TJX, Costco, Home Depot, Walgreens, CVS, Dollar General, BJ's, you name it, everything is just straight up down. Nothing seems to matter. Obviously, in a market which is largely trading on sentiment and a lot of the fear, which is translated over with all the headwinds that we have with inflation, interest rates, and potential for a recession. Fundamentals cease to matter in this type of market. Even technicals, right? We just blow past certain support levels like it's nothing. So fundamentals and technicals and valuation, those things, yes, we can talk about them, but it's mostly a macro-driven market where one inflation report obviously is driving us to lower prices, and the Fed, whatever they say, whatever they do, is going to move the markets also. Even oil is down, yeah. Finding anything green is like a needle in the haystack. That's true. I think this is the type of market we're in. You looked at the heat map, right? Everything, oh, there goes our power. It's like nothing's working for us. What the hell is going on? The power goes out, the market's down. Come on. Now this is it's still fun. It's still, it's good to spend time obviously together. Create that wish list, create that spreadsheet, and if there's any stocks that you're looking at. So Caddy, what levels Elon will get a margin call? So for margin call for Tesla, we've looked at that, and looking at when we analyzed it, what was it? So he's borrowing 12.5% in margin loan facility, right? So 12.5%, we did some calculations, and his margin loan facility, that has a requirement of 20%. But based on my estimates, which I don't know if I still have that. Let me see if I can bring that up. But okay. Twitter valuation, nope. So let's see, Tesla. Okay, power's back on. But it was closer to 375 or closer to, I think closer to $300 was where the price was, where Tesla needs to come down to, where Elon Musk is going to be under a lot of pressure for a potential margin call. But 620s is going to be that next level to watch. Caddy's energy company got margin call. Man, if any sectors that's doing well, it's the energy sector. Like, it's a whole different world for energy companies right now. Energy companies and energy investors and energy sector in general, it's a whole different world. It's like profits are just like dropping from the sky right now for them. But of course, for everything else, all the 10 sectors, everything else is just straight up down. So, but Tesla 620 is going to be that next support. 621, 620, that's going to be the next level to really be watching. A very, very important level here. So that would be the level. And NASDAQ, once again, I mean, we're just hovering at around 11,000. But at the same time, we're forming a descending triangle. So this doesn't look too good for the intraday chart. Wouldn't be surprised if we do end up breaking down here below this 10,900. That would be like a big flush for the NASDAQ. And same thing with the S&P as well. I mean, it's forming some type of a descending triangle intraday. Again, these are the 1 minute charts here. So, Caddy, thanks for the answer. Tesla owns Bitcoin or not? No, I don't think they do. I think they did. They owned Bitcoin. Actually, they might have a little bit left on their balance sheet. I'm not 100% sure. They had Bitcoin, but then they sold some, or maybe they sold all. I'm not 100% sure if they sold all or they sold some, because so they might have a little bit left on the balance sheet, because they did sell some for a profit, and they might have some left. Okay, so they sold like 10%. Yep, so they have rest on their balance sheet. Yeah, so they might have some left. Yeah, so it says my bills for electricity, natural gas, and gas went up like crazy. I mean, they've gone up for everybody, right? 70, 80%. It's like pretty normal. So MP Materials, Jonas, let me see if I can take a look. So that stock's down 6% today. And I think we've done some analysis on this company. Quarter over quarter, I mean, revenue looks fantastic. Earnings looks really, really good. Trading at 36 times earnings, 34 times cash flow. So those are certainly very high multiples for the company right now. And obviously anything that has high multiples right now is going to be under tremendous pressure. Balance sheet's good, plenty of cash versus total debt. If you take a look at the current ratio, 25, so it's phenomenal. Return on invested capital here, 12%. That's decent. Gross margins are really high. Net margins are really high too. So yeah, I might take a look at this company in the future. MP Materials. I might do some more research on them to see if there's any potential opportunity here. Year to date, the stock's down 23%. So not as much as some of the other companies. So definitely has held up very, very nicely. So Ash, when was the last time the bond and equity were sharply down at the same time? That is a great question. And there was a chart that I was looking at. It hasn't happened, I want to say like in over 75 to 80 years. Let me see if I can bring that up again. Usually when stocks are down, bonds tend to do well, or vice versa, because they do tend to move in opposite directions, but it hasn't happened in a long time. Let me see if I can find that here. Just give me a minute. Yeah, I need to find that again here. Yeah, so it was 1990s when the S&P 500 was down 3.2% and the bond market was up. Well, it's pretty much since 1977 when the stock market's gone down, the bond market's gone up. But 2022, stock market's down and the bond market's down. So it's been probably, I think, very different story in 2022 with stocks and bonds both down over 10%. Something we've never seen, actually. We've never seen that happen for the markets. So in the past, when one of them has gone up, the other one's gone down. So there's been an inverse correlation, but this time around, we haven't seen that. So look at this. Let's just focus on this chart for the NASDAQ. Right here. So this is going to be the chart. We're like at a breaking point for the NASDAQ. We'll see if we actually do break down from this descending triangle that's kind of forming on the 1 minute candle, or if we have what it takes to kind of validate that 11,000, start to push right back up and make some higher highs here. Same thing with the S&P 500. We're in this lower highs, descending triangle. So kind of like a critical test here for the markets right now. What do you guys think? Quick, we got a few minutes until there might be a decision point here, but let me know what you guys think. Where are we going to break? Is the NASDAQ going to be back over 11,000, S&P back over 3,800, or are we breaking to the downside? So Meta broke below 170 threshold. What's the next support? I would say 160s, like 165. That's still higher low, still valid, right? So that higher low from this chart that I showed earlier for Meta platforms, that is still going to be somewhat valid. That's going to be this line right here. So 166, 165 is going to be that level to watch for Meta. Okay, we're right. We're almost there. So, okay, we're going to Shadow Realm, downside, breakdown. S&P 3,500, down, downside, way down we go, down. Okay, so it's pretty clear the consensus is down. The Dow is still down about 1.85%, so. So what price will you find Target attractive? I've done a video on Target before. So I've done an analysis on Target. We looked at the fair value for them. So I can't remember what that fair value was, but I'd definitely encourage you to check out that video if you haven't already. But I'll mention it in our Discord if you want to message me, if you want to tag me there. I'll get back to you with my fair value on Target. All right, so companies here. Apple getting bought up a little bit. Still down 1.8% though. Amazon's also somewhat getting bought up. Tesla's still down 5%. Google, PayPal, AMD, Palantir, Meta selling off under 170. So we're more or less consolidating sideways intraday for a lot of these names. Yeah, the 10-year yields are up over 4%. Yeah, 10-year yield is definitely pushing higher because of all the quantitative tightening from the Fed. Trivia says a lot of folks started to invest in the last 2 years. That is the worst timing ever to start your stock market journey. Unlucky. I would disagree, and I think I've mentioned this before that if you are getting this experience right now, this early on, and you don't quit the markets, that's the most important part. Is that because 2020 obviously set expectations to very unreasonable levels, because in 2020 it was like whatever you throw money into is just going up to 100%, 200%, 300%. So I could argue that this is indeed one of the best times to actually learn about the markets, right? What's affecting the markets overall, right? Look at the CPI reports, look at the economy, look at the Fed, what are they doing? Understand how things correlate with each other, how bonds trade relative to stocks, how different asset classes trade. So this is one of the best learning experiences if you're just getting started in the markets, by far. Like I said in my previous videos, we are not going to grow in a market which keeps going higher and does not give us any challenges or any downside risk. That's not the time where you learn anything. You grow in this market, provided that you don't quit. That is really important, because in this market, it's obviously gonna filter out people that just don't want to invest for the long term. But if you stick through it and you learn from what's the market's presenting you, and you're able to navigate through that volatility, this has been the best time to learn options, right? Trade options. If you want to, try swing trading or day trading, this has been the market that's been offering you that volatility. For long-term investors, yes, it's been very painful, and dollar cost averaging for the most part has not worked in 2022. Then so be it. You trade options, right? You hedge your positions, or you day trade, or you swing trade. You trade volatility. You learn these different strategies so you're better equipped for the next recession, for the next bear market. Because I can guarantee you that this is not the first time or the last time we're going to go through this. And, like I said in my previous live streams as well, 10 years from now, if I'm doing another live stream like this and we're going through another periods of recession or bear market, us collectively are going to be better equipped to deal with that, because it's not, we've been through it together. We'll revisit our memories from 2022, and we'll talk about how we were doing a live stream and the markets were brutal, and oil was going crazy, and there was recession, inflation, and we're talking about rice prices on live stream, and we'll be better equipped for all of that. Yes, these are definitely costly experiences, but you have to think about long term, right? You just can't think about the next month or the next week or the next day, because that's what happens when you let the emotions get the best of you. And it's happened to me before several times. So like Star says, it's discouraging, and yeah, I totally understand. I think it has been. You look at all sectors that are down, so it's not just discouraging for you as an investor, for I would say like 99% of investors, right? Traders obviously are benefiting from this environment because of the volatility. So pivot, learn options, learn swing trading or day trading, learn about levered ETFs or volatility and how to trade those. And I'll post more tutorials for our members. I'll post more private tutorials on more strategies, on more options, on more day trading, on more swing trading, right? Looking at technicals, looking at different things, so that we're better equipped for anything that the market throws at us. So that's where we are, and I think that this has been a very, very good learning experience. You can't ask for anything better, much better than any class can ever teach you about the markets. Yeah, so Led says, very nice point. People need this as a learning experience. You will never know how to properly invest long term if you don't have to hold through the pain. So, it all comes down to your feelings, right? The market is a reflection of you, right? So it's about you and your feelings and how you're behaving during difficult times. Obviously, people can sit here and tell all about the bear markets and recessions, but it's not until you go through it and experience it yourself is going to be the best teacher. So those are my two cents here, my thoughts about the markets overall. And let's take a look at individual names, all still pretty much down. But I'll share this spreadsheet with all the members very soon. Just need to refine that a little bit and add more sort of columns and rows for the different price levels and different earnings per share, because at the end of the day, earnings per share is what actually drives markets. So EPS is what really is going to be the driving force behind the S&P 500. So GLS says not every broker allows options trading. A lot of traders get trapped because of this. I think, that's a fair point. Not every broker or jurisdiction you're going to be allowed to trade options. But I'm sure, there's going to be then other strategies, right? Look at day trading or swing trading, or look at volatility ETNs that you can take advantage of, or of course inverse ETFs also that you can take advantage of as well. Should be a great time for tech to buy their own stocks now. So Alexander, yes. So I think that's a great point. We've seen company buybacks to reach to record levels. For 2022, we're expected to see companies buy back close to $1 trillion of shares of their own stock. So I also, went over historically what that number's been. We've seen that number, at roughly around 500 billion. Last year was 800 billion, and now it's expected to cross over $1 trillion. So Pauline, yes, I'll do a video on inverse ETFs as well, on SQQQs, on different types of inverse ETFs, and how to trade them as well. Fidelity offers options trading. I use Fidelity to trade options. In fact, I traded Fidelity options earlier today, so they do offer it. You just have to, of course, apply for options trading. So Raghavendra, no, options trading is available. Depends on the broker you use. So if you have the right broker, regardless of obviously if you're in India or not, you're able to trade options. Okay, so that is going to be it, everybody. I feel like we're just consolidating sideways. Eventually, intraday, we might break, and there might be a little bit more of a direction from the NASDAQ. But right now, we're just hovering at around 11,000. This pattern is still not broken. So if you go over to the NASDAQ, we go over to the 50 EMA, yes, it's broken on the day, but what matters is that this is the monthly candles. So we're looking at the monthly 50 EMA, right? So it's really important to for us to see whether June, the month of June, closes above or below that 50 EMA, because last month also in the month of May, we briefly breached that 50 EMA. So you can see that we came down here, but then we got bought up to close the candle with a very nice doji candle, right? So there's a lot of indecision. So I would pay attention to this very, very closely. If you do end up closing below 11,000 for the month of June, then yes, there's going to be more potential for downside. That's a possibility for the NASDAQ, because then we would be breaking down below this big support. Last time we broke down was in the Great Recession, and before that during the dot-com bubble. And every single time since then, we have validated that support. So that's the one to watch. And S&P 500, that's going to be at 3,800, which we are now just hovering around 3,799, 3,800. So we'll see where we end up on the day today and how individual stocks also trade. Yields still higher, volatility still higher, Bitcoin's obviously plummeting down, and energy is still the clear leader for now, up over 38%, as oil prices are still up 52% year to date. So once again, thank you so much for joining, everyone. I really appreciate it. Make sure that you drop a like and subscribe to the channel if you're new here. And also the link to our Discord and our Patreon is going to be down in the description below. Mostly I've been trading options. That's all I've personally been doing, with a little bit of dollar cost averaging for individual names. But if you want to get those options alerts, trade ideas that I've been sharing, and tutorials, private videos on fundamental analysis, technical analysis, by the way, this right here is all the links that you can find. I've actually posted it for all of our members. So let me just show you guys. So if you come over to our private videos, these are all the private videos that I've posted for members, right? These are options videos, fundamental analysis tutorials, technical analysis tutorials, just general videos, trading view, how to link my charts, and of course, options trading also available here. And then all the trade ideas will be posted on this channel over here as well. So the link's going to be down in the description. As always, happy investing. Hope you guys have a fantastic day today. If you have any questions, you know where to find me. Reach out to me on either Discord, email, or message me on Instagram, and I'll get back to you as soon as possible. Have a great day, and I'll see you guys first thing tomorrow morning for another live stream. Take care.